Hello, Warriors. How you doing, Mary, Paul, Patrick Bolger? Nice to meet you. Welcome to F.A.C.E. Good morning, team.
Morning, Dale.
Ryan, how are you, buddy? You're the guy I'm looking for. So,
It wasn't me. It was Stell.
huh?
If I'm in trouble, it wasn't me. It was Stell.
No, I want to know what's behind cable weakness, euro weakness. Is it just risk off? Anything to do with Ukraine?
I'm not sure it's to do in Ukraine so much. I don't know if it's risk off, risk on, whatever you want to call it. It's just dollar strength in the main. One effect is that it stopped going down, the dollar. If it ain't going to go down, it's going to go one other way. Not sure why it's so strong at the moment, though. Yields aren't doing an awful lot. Creeping higher, but not a lot really. You look at 10-year yield still well below 3.8%. But if you want the ideal picture, look at dollar yen. And as I mentioned on the flow show, I said earlier this week, it's important to watch bad numbers out the US and how the dollar reacts to them. And we got bad numbers or good numbers, depending on how you want to call it. We got worse, or PPI dropping the other day. The market had a little blowout. Dollar got sold, but it reversed so quickly, and then restarted holding the lows again. Tells you that, as one of our roomies say, peak dollar bearishness is where we're at.
Okay. So, I mean, it'd be normal to have a correction after this kind of break, but I mean, look at what the dollar held. How much upside do you think it will have? Our guest yesterday thought 108. I'm thinking, more like 110, like half. I mean, this was what, about 1,000-point decline.
Yeah.
Halfway back, be 109, 110. You think that's viable?
I think it might be a stretch right now, because I don't think the sellers are going to give up on it that easily. But I think the easiest thing to watch is your fibs. This is why one of the reasons why you use a fib. If you draw a fib, if you can't get up to 38.2 of a move,
right?
It tells you who's still in control.
Right. And I think that anyone that's been watching us this week, they were at least made aware not to be short Canada at the 132 level. We talked about a retrace and in the ForexAnalytix analysis, a bounce back towards a breakdown. 135 is looking pretty likely here.
And that's a similar position. Look at those daily candles, not significantly making new lows. It tells you that's as far as dollar sellers want to push it.
Prior high, pretty classic technical stuff going on here. Just something I want to point out. I brought it up before it started to move, and we haven't broken out yet in the gold silver ratio, but it's headed that way. And I don't think it's going to be such a good sign for silver if we close back under this 2088 level. I think it could possibly negate the whole breakout here. So if the gold silver ratio is portending on a breakout 96, I don't know, could we have a full-blown retrace in the silver? We'll see. But
I'm looking at 2060 myself, but
okay.
Yeah. Yeah, those lows.
Why?
Because I have to look at my chart. I think there's a fib as well there, but basically it's those. It's is that big candle, not the first one? Sorry, 1 second.
Yeah.
Sorry, I have a couple of noisy kids here. Not the first big candle, the second one. It's basically the lows or close to the lows of that one. So
I see it.
Anyway, it's just a level I picked. I mean, we have to see. We have to see a move below there before I change my mind.
Yeah, I'm just wondering if what we had here, we're getting a repeat performance here. I mean, I remember when I thought we had a breakout here, and then I bought a retrace, and then I gave up on it for a while and just stayed with my miners. I trimmed more than 50% of my silver miners this week. There was one that just wasn't acting well. I hear if you guys are fans of miners, you know, sometimes a market will prove itself having more relative strength. And so this was one of the silver miners I was in. But compare this pattern to Fortuna, okay? I mean, on a pullback, which one do you think I'm more interested in? This or this now? I'll be an optometrist. Which is clearer, this or this? This or this? And then I'll tell the guy I'm not sure, but on this one, I'm pretty sure. That's pretty impressive. And the gold miners, I don't know. I mean, I feel like I've been in this one forever. You know, every time it rallies back up here, I have to ride it back down again. But I stayed with the gold miners because of the gold silver ratio. You know, I think that for a while, if you're bullish the metals, you buy the gold if you're on dips. And if you're bearish PMs, you sell silver on strength. So anyway, I think the biggest surprise would be for this to just negate and we're back down here again. Part of it's probably this, right, guys? Why the big weakness in S&Ps besides the old Wall Street expression that the bears feast on Thanksgiving and the bulls do on Christmas? I don't think that's the reason.
Yeah, I think the dollar rallying is probably causing a little bit of that. But there's a chart I posted on the chat room this morning. Put call ratio on the S&P is, if not all-time high, it's very, very close to, you know, it's.
You mean a lot of calls? You mean euphoric almost?
A lot of puts. So
a lot of puts.
Yeah. So if you know if the market's one way,
usually
anyway,
that's contrary. But okay.
I don't know. I don't know what's.
I don't. Yeah.
Who knows?
Okay.
Who knows?
All right. Well, we did say for days Blake kept bringing it up all day. Steve at 61.8. Steve at 61.8. Nice eye, Blake. And being distracted, the guy didn't leave his feel for the market behind. What an animal you are, Blake. Anyway, here's Aussie. Ryan, where would it turn? You know what? Let me get Kman in here.
Oh, hello. Just joined.
Hey, oh, you here? Okay. Your view on yen, you were catching falling knives. It's working out for you.
Yes, it is.
And they really weren't falling knives the last 3-4 days. So you're just being dramatic, man.
Yeah. I bought special butcher's gloves, you know, to catch those knives. Yeah,
smart.
I mean, I'm still in the same scenario. Did it again this morning on the early European dollar selling wave, and then yeah, but it's all about yields, right? I mean, the dollar tends tried below 370, and now it's rebounding, and the dollar obliges. So yeah, I'm still pretty positive there.
What do you think would happen to the dollar? I saw a count. You know, I do a lot of intelligence gathering. I'm really not that, you know, as smart as I sound. I am because of, you know, listening to you guys and people that I interview, and you know, some other people that I'm in touch with. But what do you think would happen to the dollar if we got a rally in yields back to say 4%?
Oh wow! I think there's going to be a bit of surprises, people surprising the market, right here and now. Yeah,
all right.
I said it right, and well, that's my view is that we are going to range a bit in those yields until we see the next real data coming up, and so my feeling for the dollar is still on the back of this is rangy as well. But in current context, seeing all the corrections that we've seen, I'd rather be a bit of a dollar deep buyer right now against against some currencies. I mean, you always have to be speaking with two words and be a bit careful. Stuff like the dollar block, for instance, dollar mex, I would be perhaps a little more cautious in doing that. But stuff like the yen, which is really very, very correlated to the dollar yields, it's it's quite a nice scenario right now.
Would you buy the cable at 109?
At 109, yeah, I think so.
You think I'm being aggressive on that?
I think you're
looking for 109.
Aggressive or optimistic?
You offered, Dale? Are you offered?
I think it's a bit optimistic right now, and
well, there's support along the way. I mean, this area right here.
115, 116. All the halves really. 117 and a half, 116 and a half, 115 and a half. There's going to be support down the line. Tell you what, I'm in the cable. I'm just trading around an option that I have now. I bought a put yesterday, right here, around 118 on the budget. But it's not the UK budget who does it. It's just the dollar. The budget is only responsible for maybe 50, 60 pips in the whole thing. So yeah, sometimes trading ranges is stuff that we do, and keep the bigger picture in mind, and then trade the smaller moves inside, right?
Yeah, we'll just buy the 109 next year. One thing I did want to show here, which is indicative of like what you say, Kman. We have the pivot, not pivot. Now we have the lockdown, no lockdown. This is not good action in copper. We rallied right back to resistance, and unlike silver, which actually got to it and penetrated it, copper was not able to, and it looks like it's negating this breakout. So this too, are they, did we get any news out of China the last couple of days?
They're still, the cases are still going up. The lockdowns are still there, but then they are trying to orchestrate it very, very slowly, and I think the market is just calling their bluff. And if you look at those things like copper or silver, and stuff, it's really, look at the dollar CNH and you will know why those things. I think there's a real strong correlation now, and whatever happens in China is going to drive copper, perhaps silver, perhaps.
It's a whole commodity game. They always have been,
Yeah.
In fact, I remember, earlier in my career, you'd hear China's buying wheat, China's selling beans. And, they were always putting that out if they were buying beans to be able to liquidate into it. And when they said they were, buying something, they were selling it. And when they were selling it, they were buying it. They're very good commodity traders. And here's energy lower as well, looking pretty heavy. And let's look at I know I have it here, Bitcoin still going to 14.
Do you have the dollar CNH on there?
I do have it somewhere. I should move it up to down here.
Well, anyway,
here we go. Yeah, so I noticed that the other day. Wow.
Yeah, look at that move. Look at the daily, the 4 hour. Look at it in front of the 7. People are starting to buy it again, and then I think it's just correlated with what's happening in the commodity sphere, right?
Okay, all right. You think we could get a new high, Ryan? I know you traded with Kman, or should we be looking maybe for a failing rally and a right shoulder, and this might be a neckline?
Yeah, we've got a bit of resistance. You can see from those other candles when we were up at 730s, we came down to this 7, 17, 16 area. We need to get above 20. We might have a run for at least 30s, maybe. I think it might be a bit of a push. I expect a bit more of a range to develop. As I said, with the rest of the dollar complex, I don't think sellers are going to let this run away and go all the way up. But then there's still risk. We just had Bullard out, who's just basically says the lower bound on policy should be around 5%, which is way above the Fed's 3.75 to 4% and it's shifting up, and we still haven't heard from Powell in all this. Still a big risk. Yeah, I think it's gone more two-way in the dollar, particularly.
Okay, what a great opportunity it would be to short some US dollar MEX if we rallied back to the breakdown you guys were talking about.
I love it. I love it. Please.
I knew I'd get you in here if
let's
I
actually
talked about the
Let's
sell some.
Funnily enough, that's what we talked about on the Flow Show this morning.
Oh, well,
Yeah.
kindred spirits.
That's right. I love it. I love you guys are talking about the dollar MEX. Yeah.
All right. Well,
and I look,
how you doing today, man?
I'm all into selling bounces here. I mean,
can we get up to here, Blake?
I don't think it's going to be that far. I think 1960 is going to cap it. But
right.
The one thing that I wanted to say here, I'll show you guys what I'm thinking it. But
thanks. How did I do today?
You did great. You always do great. You always do great.
I'm always relieved when you take over.
I know. It's like no, I can go pee again. I'm just kidding. So no, so the dollar MEX is actually pushing up against a wedge resistance right now. And I think this is going to be pretty key resistance for the dollar MEX. But also if you go over to the weekly chart, this is the one that's really got me. This is the 2017 low. So I mean, we're dealing with basically 5-year trend line, and we're below it. So as long as we stay below 1960, 1970, 65, somewhere around there, I played it long actually overnight. And I actually got out of it and took profits this morning. Because I don't like being long, but I'll play it while we're in this wedge. I'd rather be on the short side, and that's what I was doing. That's what I'm doing now. It's like I like to sell rallies. So, but Kman, let me ask you, because you trade this a lot. How do you feel about it? I mean, the Mexican peso being
MEX in general. I was just saying in the room this morning. I think I may perhaps today after the data or tomorrow have a look at the MEX again, letting this dollar strength play out a little bit, see where the euro end up as well, because as you know, I like to play the euro MEX. But we seem to find the resistance around this 2020 zone in the euro MEX and the dollar MEX. There's this 1950s, 1950s a little bit, and then the ideal one, I would think, is if we see further dollar strength, is to try and get a test up in those 1960s, and there I think in the dollar MEX will be a fair level to try it again.
Nice. All right.
I just hope we can get there, because I don't know. It's looks like Euro MEX is starting to find resistance as well. So I'm not sure if dollar MEX can go a lot higher.
All right. Well, we'll see. We'll see how it's interesting how the Euro MEX just bounced in, and we're just sitting here. This is I guess I'll point it out right here. This is a pennant. So that's one thing that if I was bearish, the Euro MEX is the one thing I would be thinking about. Speaking of the euro, I mean, the euro actually has come off pretty good, but we're on triangle support. So that's pretty key right now. I think that we got to be watching that because the S&P has come right back down to the breakout point. And I'm sorry, my watch list over here got a little screwed up, but here's the S&P. That was big resistance on the way up, big resistance. Once we broke that, we took off to 4,000 and above. We've come back down right to the breakout point. Look, I wouldn't want to be short S&Ps here. I mean, we've come off pretty nice today. We've seen, I think a lot of people are leaning into the Aussie. I mean, the Aussie's rolling over really nicely from the 618 retracement channel resistance. I was just talking to Chris Weston about this last night. You've got the euro rolling over from the 200-day moving average, basically, right? So you got a lot of people leaning into risk. And you lean into risk right into support, and there's I think the risk might be increasing that we actually bounce from these levels. What do you think about buying risk here? I mean, what do you guys think? I know most of you guys are bears, but should you be a bear today? Should you be bearish here? What do you think, Stell?
Well, I want to sell S&P at 4,100, but I don't want to be a bear here. So yeah, there you go. I think it's given the situation, given positioning, given everything, I think the risk is probably we keep rallying a little bit. So I wouldn't want to be short down here. So what's that level you have there? 39.10, 39.15 or something like that. I think that's
20, 39.15. That's right where we're at.
Yeah. I think that's, around here is probably not a bad level to try along, obviously with a relatively tight stop. You do have also,
if you've been short the last couple of days, and remember, this is a trading market, guys. This is not there's a much different market environment that we're in today than we were like last year at this time, or the previous years. When you're just you're in a rally mode market, or you're just in a straight down market. We're in a choppy consolidation, play both sides of the market. I can't tell you how many times I'm on both sides of the market intraday. And one of the ways to really know that is actually being in the ForexAnalytix chat room and seeing exactly where Blake just or Kman just took another trade here, and Blake closed out a position here, and there's his open positions, and everybody else and what they're doing inside the trades room. One of the best ways to know exactly what we're thinking. But hey, we're in a range bound environment. You've got to be able to play both sides of this market, and I think that's what we're doing right here, right, Stell?
Yeah, and I was going to add, if you've been short last few days, I think this is a really good. Yeah, well done, and this is a really good place to take some off, definitely.
Yeah, of course. Okay, now, Ryan, we had I'm sure you guys talked about it, and I'm sorry, I was not ignoring you. I was just trying to get my house in order, and not House of the Dragons, you Targaryen people over there. Some of you know what I'm talking about. What do you think about, speaking of the house, what's happening in the UK budget, and what's jumped out at you today, and how are you interpreting everything you've heard from Jeremy Hunt this morning, right?
Yeah, I'm glad you got that one right, Blake. Jeremy Hunt.
It is right. Is it right? I'm right? Right?
Yeah. But there's lots of bloopers in our press about not getting his name right. That's on YouTube for those who want to look at that one. It's all gone by without much fuss. We knew what we were getting pretty much. 95% of it's always dropped beforehand. You could pick a few bits out to say negative. The OBR saying that they're going to miss on a couple of their targets, but the other measures will bring stuff back to target later on. It's a lot of fluff. I don't think the market's paying any sort of attention to it in the main. What we're seeing today is dollar moving, whether you want to call it risk, whatever. So water under the bridge as far as the UK stuff is concerned.
Okay, so do you buy this pullback then in the sterling? I mean, it's been a huge move, obviously, from the 104, 105 level to 120, and our probes above 120 failed. It's 161% extension. You can see it right here. If you didn't catch it yesterday, this is the reason why we stalled above the 120 or 120 level. I mean, do you buy it here on an eventual move to 130, or do you think we come back down to 110 before we bounce back to 120? I think those are two viable options, right?
Cable, it can trade 110 to 120 in about 5 minutes. Right. I think you've got to be looking around maybe 117s. That's maybe your real area if you want to try and think that this isn't going to go all the way back down. If it fails at 117, then we're probably heading 115s next.
So you're basically looking at a pivot here or a pivot there, right? Something like that.
Yeah, pretty much.
The 117 level.
But Cable, you've got to pick the big strong levels. We are seeing some minor breaks in. If you look at something like Aussie dollar, couldn't get through 68, pulling back. Level was 66, 40, 50. 60, 70. I had. We're under that now. Could mean a push down to the lower 66s. Take a look at something like. Well, I'll wait till you finish drawing your lines out. That's the big break area. So that would be your, 117 in Cable, if you like, and we're nowhere near close to that. But the same with gold. Failed to get above that fib at 1789. Had a few goes, couldn't do it. 1750, 60 is the level there for gold. Under that, we're probably heading to the low 17s. So there's lots of little places where, you know, we've tested them, we're holding them. It keeps these rallies in play. But if we break these levels, if we break 117 cable, break, you know, 1750 in gold, then we're going to undo more of the rally. But if we hold, it keeps the rallies in play.
Sounds good. We have just a few minutes before Dale's going to take over with Giles, and I really like Giles. You know, I don't interview him as anymore due to you know sponsors and blah blah blah. But I really do enjoy his analysis. He's also there in the UK. He's going to be giving his opinions on the market, I'm sure, here shortly. But I don't know if Steve is here. Steve, are you here this morning?
I think so.
Oh, he is here. Hey, Steve, how's it going?
Good. How have you been?
Good. Well, it's nice. I'm actually back home, settled back in. Everything seems to be fine here. But I wanted to get your opinions on the markets. You've been covering analysis for me in the evening. Thank you very much on the ForexAnalytix platform. So if you guys, you know, use the ForexAnalytix platform, you guys have been reading a lot of Steve's analysis at night. So Steve, what are your thoughts here with, you know, you got the stock markets pulled back a little bit, you know, we're nearing some support. Do you buy risk here? What are you thinking? Is there anything that really is standing out to you that looks like a really good trade right at this moment?
Yeah, we analyzed the path forward yesterday in the morning edge. And so far, things have been working out as expected. I said that I think there is a good chance that we're going to get a short-term reaction higher in the dollar since it was obvious that the market was unable to keep pushing lower. I mean, we got data that supposedly should help it. It should help, you know, the dollar move even lower the day before yesterday, and that didn't actually do the trick. Yesterday, we got some data that would actually point to a possible dollar strengthening. So I said, you know, there's a good chance that we're going to see a dollar rebound in the very short term. But I think there is a very good chance that this is a very short-term rebound in the dollar. I would ideally, at least that's the trading plan I have in mind, I would ideally then see the dollar continue to the downside until we get the next Fed meeting or until we get closer to the next Fed meeting. So I do think that there is a good chance that this rebound in the dollar is temporary, that we're going to see another move lower in the dollar and higher in equities, and then see, you know, a bigger reversal.
All right. Well, let's see if we get that bounce, you know, in the stock market, and the dollar is trading heavy. I mean, yeah, you know, I know it's bouncing right at this moment in time, but if you look at the euro, I mean, the euro's, I mean, move has been very, 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 you know, just it's a minor pullback, and I look at it as triangle consolidation. I wouldn't want to be short here, the euro this morning. Actually, I just bought it before I started speaking a few minutes ago. So if you guys are not in the ForexAnalytix trades room, you are, you know, knowing that just around the time that I bought the euro, which was about 6 or 7 pips ago. So, but I think this consolidation is pretty important. Now, let me ask you this, since we have, and Stell, you can chime in here too. We've had a really big reaction in the euro back above parity. You know, now we're consolidating well above 103. Do you guys think that the euro is going higher from here or lower from here, like overall?
That takes a view on the Fed, right? We definitely
maybe the Fed. You got winter issue, and by the way, we don't have any data until we have. I think we have Philly Fed coming in a little bit later.
Philly Fed, jobless, building permits.
We have some.
Oh,
data
we do have
now.
jobless
Yeah,
claims.
we do,
Okay,
yeah.
so real quick, what do you guys think about? And I'll pull up. I'll just pull up the
on a longer time horizon. I think we're going higher.
Okay,
but if or when the Fed disappoints, we might see another leg. By the way, I see Giles. Great. I'm a big fan of his. Let's see the numbers. Okay.
Moment of truth.
Let's see, any second now. Okay, building permits housing starts slightly better. I don't think it's big enough.
More or less as expected. Yeah.
Philly Fed is the one. Philly Fed is the one I'm looking at. Where is it? It's not here yet.
Where'd it go?
Initial jobless claims in line as well. Yeah.
Yeah.
So just Philly Fed to go.
It takes a while for it to get here from Philadelphia.
So for the time being,
Dale, your grandpa jokes. I love them.
Philly Fed cratering.
Oh, minus 19.4. This is bad.
Philly Fed cratering.
Ooh.
Expectations were for an improvement from minus 8.7 to minus 8, and instead of that, we got minus 19.4.
Big drop in employment too, 7.1 versus 28.5. Prices.
If you guys have not seen the data flash that does come with the ForexAnalytix subscription, along with live squawk feed, their written feed all comes through ForexAnalytix here. So make sure you guys take advantage of that through the trader funding program. If you want to learn how to trade our money, make sure you click on this video. You watch this 2-minute video, it'll tell you what has to happen for you guys to access our funds. I'm sorry, Ryan, I didn't mean to cut you off. I know we have an interview coming up. Ryan, what did you want to finish what you were saying?
Just saying that it's a bit ugly on the unemployment number, 7.10 versus 28.5 prior. Inflation, i.e. prices paid, was just down a little bit, so not really a change there.
Okay, all right, very good. Dale, I'm sorry, you were just saying something?
Just do it.
Just do it. All right.
Just take the assessment already.
Yeah, I mean, look, there's a lot of opportunities for you, but what's more important is there's a lot of community here for you. I mean, there's that's the thing about this is the ForexAnalytix community. If you guys want to just see how much talking has happened just since I've been up for an hour and 15 minutes or so. This is everything that has happened in our chat room since I said good morning, everyone. And you can see all the discussions. This is just the general chat room. All the charts, all the markets.
You could come in like a blank slate and have ideas.
Wait, what happened there? Oh,
Salma.
And yeah, I mean, there's a lot going on here. And then obviously there's discussions that we have, threads that that are, side conversations that everybody's having. And then, obviously we have the trades room, macroeconomics room, Flowonomics. This is where Ryan and Kman are at all day long, talking about, what's actually moving the market. So you guys come join us. You can get to us through the trader funding program, also through forexanalytix.com. All right, Dale, it's yours. Giles, glad to have him here.
I just want to say that Kman has a new course, how to catch knives without getting cut. So if you're interested in that one,
we're all interested in that course. We are really all interested in that course.
He does it live. He flips the knives in the air and everything. So
he's like a Ginsu knife champion. All right, guys.
Giles,
have a great one, Giles.
Thank you, team.
Yeah,
welcome to
cheers, Blake.
Hey guys, thanks. Giles, welcome back to F.A.C.E. Everyone, Giles is the chief market analyst at HYCM. Welcome back, buddy.
Hey Dale, how's it going?
Doing pretty good, buddy. Gosh, you look sharp this morning, and you're happy. So you have some pairs that you want to share with us today that you were talking about on Twitter, or has the menu changed with today's action?
Well, no, I mean, obviously we've had the UK budget, and it really has been not surprising. I think from a political perspective, it's been quite well handled. But from a financial perspective, that means little reaction. So I think it's a political success. But in terms of the overall moves for the pound, I think everything's pretty much as expected, and the pound should continue to be dollar driven, which is something that the UK really struggled to understand, is how much the dollar drives what's happening with the pound, particularly in the UK financial media. I'm often speaking to financial journalists who are worrying about the fall in the pound. And I say, well, look, it's all to do with the strength in the dollar. which has been weakening the yen, the euro, the Aussie, the New Zealand dollar, and the euro was roughly comparably the same weakness as the pound. Euro's about 9% down against the dollar, pound's about 11% on a year-on-year basis.
Okay.
So
let me ask you.
Yeah.
Let me ask you about this dollar bound. So is it your view, this is a big question, was that the high, an important high for some time to come at 1460? Or is this just a bounce to correct the 1,000 pip decline approximately? And this is a dip to buy in things like cable and
Yeah. Should I show you what I'm looking at?
Yeah.
Should I share my screen? And
yeah, it's at the bottom, buddy.
Yeah, thank you. Just give me a second. Let's have a look. I got it. There we go. There we go. Because I was enjoying listening to the discussion before I came on. And the thing that was really striking out to me is the path of a lot of these major pairs is going to really depend on the incoming data. And I think there's some really fantastic opportunities that are really worth looking at. And I'm just going to run through.
We just got a very weak number in the Philly Fed.
Yeah.
Has that helped a recovery in euro? I don't have my screen up now, but did the dollar give some back on a weak number?
It's very marginal moves. We've got a little bit of a dollar dip, but not major. I mean, just while I'm waiting for my calendar to load up, the big one that I'm looking for is on December the 1st with the core PCE print. We know that's the Fed's preferred method of inflation. So if we see that coming in below markets expectations, then we're going to see another flush lower in the dollar. We should see S&P 500 pushing higher, and we should see gold pushing higher as well. So what I'm looking for is that incoming inflation data, which is just so crucial, and that flows out in the PPI data, and that's going to tell us whether the pound has bottomed. I mean, looking at the price action, there's so much bad news priced in for the pound now. We've got a full year recession. The Office for Bureau Responsibility said the UK should be in recession from this quarter all the way through to the quarter next year. Unemployment is expected to rise to 4.9%. The general outlook for the UK is one of sort of depression in terms of the political angle. We haven't managed to sort out Brexit. We don't have a clear direction. The Conservatives have lost voters' confidence, but they've got 18 months until there's a general election. So we have the prospect of another vacuum period. So in terms of more bad news, we already are on a semi-war footing with Russia. It's very hard to see how it can get worse for the UK. So from the pound's perspective, I think that's the bottom. But it will depend what happens with the dollar, and what happens with the dollar will depend what happens with inflation from the US.
Okay.
So if I was a betting man, my base case is I'm expecting the pound to gain against the dollar from here on in.
From here.
Yeah.
So it'd be unreasonable after a 1,700 pip move to even be looking for a 38.2 retracement of that?
No, when I say that my broad view is to the upside, I wouldn't be trading that. I would have that as my bias, but I would not be buying the pound at these current levels. I would only be, the way I'm trading it is intraday, Dale. So I'm looking for a short-term deviation, and then I'm taking maybe 50, 100-point moves, closing my trades, then looking for the next opportunity. So I'm not in a scenario where I'm so convinced of what's going to happen. There's so many uncertainties. Will inflation be stickier? Who knows? Will the Russian-Ukraine crisis get worse? Who really knows? No one really has a firm idea on what these outcomes will be, and people have been wrong about them in the recent past, and they're very intelligent people that have been wrong about them. So I find the safest option, as it were, is to take those short-term deviations when it's obvious what's going to happen. That's really what I've been.
What time frame do you trade off of while you're scalping in day trading?
Like 15-minute chart.
Oh, that's Ryan's favorite.
Yeah, it's just
I like them too. The 15-minute chart. Okay.
Nice and easy. So I shorted the euro US dollar this morning. I went long the dollar index last night, and I've just closed both positions out. That's it. I've taken what I wanted, and now wait for the next narrative that either I've got a sense of, I'm either in the flow of the market, or there's a key deviation. And we just saw a lot of dollar weakness recently, so it just felt natural to have a bit of a retracement overnight, and that's what we've seen.
Okay, is it your view on the longer term analysis? It must be, because of the way you're talking about cable, that the dollar peak that we had a month ago could be long standing, and that, okay, long standing, not a short term top, at least intermediate term.
But I've been wrong 6 or 7 months on the dollar top. Okay. So I don't trust myself on calling the top in the dollar, because I was expecting the dollar to peak much earlier than it has, because I was expecting inflation to peak much earlier than it has.
Okay. Well, be a broken clock with me and say that.
yeah, at least you're right. But I don't trouble myself over that, because I'm not trying. It's like I can't see the future. So when my trading perspective, I was speaking to a guy at our church.
Oh, Giles, they'll let you wear a tinfoil hat where you live.
Yeah, he said.
And and get under your pyramid and make Nostra Coughlin calls. So okay. Any view on? I know you were going to talk about a yen cross.
Yes.
We had that huge vacuum decline in the yen once it took out 145. Do you think that high, although it was accompanied by intervention with everyone said, oh, it won't work, I think it worked. And do you think that that's a long-standing high, and now the yen has much further to fall with yields?
I think the question of the yen intervention working is, once again, everything comes back to the dollar, doesn't it? It was really a dollar story that helped the Bank of Japan, because they'd intervened a couple.
No, it was a Wall Street Journal story.
Yeah. So, it was.
So it really was a story.
Yeah. And if you look at the Bank of Japan's communication, they knew that. They didn't tell you a level. They were very cagey about when they were going to be intervening. They know recent history. Look at the Swiss National Bank. They failed to peg the euro Swiss franc. The RBNZ failed. The People's Bank of China mooted pinning the 7 handle and decided against it. So every central bank that's ever tried to peg a currency have not succeeded in and of their own right. So yes, it was the drop in 10-year yields, which was always going to help the Bank of Japan. And I think they were just carefully trying to cleverly do their timing alongside market dynamics. So
well, they were early first at about 138.
Yes,
they did go to 52.
But the way I looked at that is they wanted to.
That was their rookie. They had their rookie trader on the desk. Someone like us, Giles, we're always early. So, but they backed it up, and that was really the key, right?
Yes. So as long as inflation drops, I think that is the top, and that should be the end of the yen weakness. Okay. It should strengthen.
So the next inflection point I'm getting is wait for December 1st for the PCI.
Yeah, the PCE, that's the Fed's preferred method of inflation. So there'll be a really good indication of what the Fed's going to be looking at in terms of their December the 14th meeting.
Okay.
So that's what I'm focusing on, these short-term, highly probable trading opportunities, and just trying to take little bites out of the market.
Well, the Fed, I don't think is that happy about the big rally that we had in equities, and there has been some Fed speak talking about a terminal rate above 5, and we're not even at 5 yet.
Yeah, but I thought Jerome Powell did an amazing job at the last rate statement. I thought it was genius, because the statement itself said that we're going to be thinking about monetary policy lag. So that was dovish, because he was essentially saying we will be conscious that when we hike rates today, it's not going to have an impact till 6-12 months down the line. So that's more dovish. But then in the press release, he said, we're going to be continuing to hike interest rates to a greater level than we previously expected. So he's kind of kept both roads open to him via that statement. And in the UK, we'd say he's running with the hares and the hounds. He's playing both sides. And for me, I thought, wow, that's very good central bank communication, because he's allowing both options for himself as a central bank, playing a little bit with the market, which I think you have to with so much speculation around. You have to shake out some of those loose hands and try to get people who are settled in order to get some stability, which is what his goal is a stable currency market. So it's, you know, beneficial for US investors, US businesses. So I thought his communication was very clever.
Very good politician.
Yes.
He's a lawyer.
Yes. And he's conscious of how the market's going to react. So it was, you know, I know a lot of these central bank speakers get a lot of flack, but there's a real fine art to communicating to the market, because you're communicating to people that are never going to be happy with what you say. You're going to disappoint someone terribly. So people vent off their frustration, particularly in the financial community, because central bankers say things they don't want to hear.
Okay, I have a question from an attendee, from a viewer. Patrick wants to know, what do you think about a new 35% windfall tax on UK energy companies? How would that affect the pound?
It's not going to affect very much, because number one, domestic UK energy companies don't do much business within the UK itself. So it's a crowd pleaser. So that tax hike of 35% looks like the UK government's getting tough on big energy companies, but actually it's a very small amount of revenue that will be generated. And it's only been raised from 25% up to 35%. So it's just a 10% increase. Okay. And really what the UK government is saying, yes, we're recognizing the windfall tax, but it's going to have limited impact. It's not going to be a big revenue generator. And the last thing the UK government wants to do is to put off big business if they think they're going to be hit with windfall taxes should, you know, market conditions suddenly favor their business. The last thing the UK government will want to do is to put them off. So
yeah, they want them to continue to expand production.
Yeah, exactly. And if you think about it, the UK policy autumn budget's been quite clever, because on one hand, the fiscal spending is going to carry on. So public services spending is going to increase by 1% a year for the next 5 years. But at the same time, the debt to GDP ratio is set to fall by 2026 and 2027. So it hasn't withdrawn spending. It's not pulling the rug too quickly, but it's just saying our trajectory is that we're going to be spending less as we move into the future, and we're going to get our debt to GDP ratio down, even though in real terms we're giving extra money to schools, extra money to the NHS. Both of them are big winners out of the budget. So again, it's a clever balance that the UK's had to do, and I think they've hit it just right.
Okay, I'm sure you're getting questions from people that follow you. I'm not sure if people can trade Bitcoin at HYCM. Can they?
Yes, they can, crypto? And Ethereum, quite a few different cryptocurrencies at HYCM.
Okay, so I'm interested in your impression of the fraud, and whether or not just because we're fraudulent brokers, quote unquote brokers, commingling funds, and we have this big disaster, does that really affect the credibility of the instrument itself? You know, I think that I'm starting to see some divergences develop down here. I'm watching. I mean, don't you buy when there's blood on the streets?
Yeah, you do buy when there's blood on the streets. It just depends.
Lots of blood.
Yeah, it just depends where the streets are and how much blood there is, right?
Yeah, it's hemorrhaging. We're hemorrhaging here. With, bad news.
The only thing that makes me think that that's limited in its falls is because the amount of large institutions that hold Bitcoin. So given the fact that there's a lot of big players who have these whales who have huge amounts of Bitcoin, they're less likely to just suddenly, change their outlook on Bitcoin all of a sudden. So I think if I was trading Bitcoin, which I'm not, Dale, I would be looking at major technical levels like the 100, 200 moving average, 5-10 year trend lines, looking to lean against those levels and taking out small chunks. But a small chunk with Bitcoin's got to be $2,000 or $3,000 stop loss anyway. So as soon as you add a bit of leverage to that, you can quite quickly be in hot water. So a lot of retail traders have to be very careful when they're trading Bitcoin to remember that volatility. But it reminded me of a Charles Dickens novel called Little Dorrit. And in that novel, there was an investor who was hailed as the man of the moment, the man of the season, who was going to be the answer to everyone's financial woes. And he attracted to him people who were desperate, people who were greedy, businesses that were struggling, thought if we put all our reserves into this investment manager guy, this will be the salvation of our family. Of course, he was embezzling funds, it all collapsed, and everyone lost their money because they committed the sin that Charles Dickens said it was kind of, I can't remember what the name was, it was something like investor's mistake or speculator's guilt. That's it, speculator's guilt. And that's what Bitcoin FTX sums up to me. Because what was being sold, it was a dream. It was a dream that we can forget all these old fuddy-duddies and their banks and all the money they were taking. We can generate wealth to change the world. And if you just give me your money, we're going to change the world by generating wealth. Intoxicating message. And I don't know if the gentleman involved just got confused or too into what he was doing, didn't understand the risks properly himself. But it just seems, once again, speculator's guilt. It will happen over and over again. That there's something inside of us, Dale, that wants to find a quick solution, a hero, someone who can save us from whatever particular difficulty is right in front of us. And it will always succeed. And it's a reminder why regulation is actually a good thing. It's a good thing. Like our broker, HYCM, it's a regulated broker, which means if our broker goes bankrupt, the government will underpin a certain amount of your deposit. Whereas FTX wasn't FCA regulated here in the UK. No. So that means all the money you had with them, you have probably lost.
Right. I used to say trade with a clearing member firm, like a member of the CME, CBOT, any major exchange, because then you're guaranteed by the exchange. The other clearing members, like when Stotler went down, had to go and make the customers whole.
So regulation can be a very good thing. And I think that's one of the things that perhaps, sometimes it's very hard to fight some of these powerful arguments, isn't it? There's a young guy, it's all hip, it's all cool. And actually,
home run ball hitters. The
home run ball hitters. And actually, sometimes you just need some home truths. And that's not me against anyone or anything, but it is an observation that whatever was going on at FTX got out of hand. And I think with regulation, it wouldn't have been allowed to.
He was Nick Leeson on steroids.
Yeah.
And he took down a bank, fighting a position. That's misappropriating funds, same thing.
It's exactly the same thing. And that is a very human mistake to make, because you get in a bit of too much bother and then you'll pull every stop out to try, it's that one trade that will make up everything. It's that one hit wonder. We look for that. It's in our human psychology.
I've tried it.
I think everyone has.
I mean, who hasn't tried it?
Who hasn't tried that one-hit wonder? You know what I mean? If I just, this one shot, if I make this one shot, but of course it's never the one shot. Even if you make the one shot, you'll be back to making other one shots, right? So,
not a good habit to get into. So better off bunting the ball and running out and getting a single. So sometimes you have to get hit in the head with a ball peen hammer a few times to know it hurts, Giles.
Yes. Exactly. So I think it's just a good reminder. I mean, and seasoned market veterans, they're just like, well, we've seen it all before and we will see it again. And And it's impossible to communicate that really to someone who's just new. So you can see there's a constant generation of new people entering, you know, financial responsibility. They're 18, 25, and they don't understand the psychology of market dynamics, and they don't understand the psychology of themselves, let alone other people. And it's hard, it's a hard skill to teach. You know, how do you teach buy the rumor, sell the fact? You know, how do you teach that you sell when everyone else is buying and you buy when everyone else is selling? It's so counter.
By example.
Yeah, by example. It's like with the China, you know, everything was going so negative on China. I just recently, I was buying China 50 because I thought there's no other bad news to come. You know, it was just negative after negative after negative about 3-4 weeks ago. And I put quite a few articles out there on it. I just said, look, this is overdone. I said, will COVID zero policy be in place 12 months from now? No, it won't. They're not going to hold on to that forever and ever. And the way the market was reacting was as though COVID zero was a permanent policy. You know, and
maybe they end it in the spring.
Yeah,
and the markets will see through it. You know, we have to get through our own COVID winter coming up here in you know, the West. So we'll see.
But the difference, what I noticed, they didn't vaccinate the elderly in the same way that the West did. So the problem they've got is that a lot of their elderly population haven't been vaccinated. So they can't just freely open it up because it will mean a swathe of elderly people will die. Mm-hmm. And their hospital infrastructure is not like ours in the West. It's not so well organized. So they're much more vulnerable to an outbreak. That's why the National Health Commission said they were going to prioritize the vaccination of the elderly. So as soon as I saw that one headline, I knew that that was tantamount to a pivot. Because what they're saying is we're coming out. But they can't just say we're coming out of COVID zero. The way the state works, the way the government is, you just had that People's Bank, the People's Communist Party meeting. The way the politics work, you don't just come out and say we're changing tomorrow, guys. It has to be gradual.
Okay. Yeah, I had a gentleman on who lives in China.
Yeah.
Jerry's take on China, very interesting. So
he
lives there, and he gave us his views on some things that you know, here in the West may not be correct narratives. So Giles, where's the best place for people to follow you? And I know you're looking to buy a break in gold coming up here sometime, maybe after December 1st. But as far as being a chief market analyst, you're golden. Okay, the way you treat
thank
people,
you very much, Dale. It's
and really care about people getting hurt. I hear it in your voice, and it's important to care, and people will feel it and be more open to what you're trying to teach them. And so they're lucky to have you.
No, that's very kind you said, but I've always seen if you look after people's money, you look after people. Because money is a great tool. It's what education, your health, you provide for your family. So for me, there's a very close connection between caring for people's money is very close to caring for people, and unnecessary losses can be limited by limiting certain market behavior.
Giles Coughlin, trying to help people avoid the landmines that I know both he and I have stepped on. That's a very noble mission. Thank you so much. Great talking to you, Giles. Have a great winter holiday season. We all root for you. You're one of our favorites here at F.A.C.E.
Oh, thank you very much, Dale. It's great to be with you. And my blog is bloghycmlab.com. It's HYCM's blog. Just so compliance don't get, keep them off my back.
The Chief, Giles. Everybody.
Thanks, guys. Bye, Dale.
See you guys. All right, that's a wrap. Everyone love Giles. Thank you, Patrick, Paul, AAA Auto Club. Oh, okay, AAA. So thank you, everyone. Remember, don't just count your pips, count your blessings. Having people like Giles in the industry is one, in my opinion. All right, Gorkum, you're welcome. You could join the team in 15 minutes on the Morning Edge. Good hunting today, Jennifer. See you all tomorrow to wrap it up. TGIF. Adios.